Good morning, everyone, and welcome to Morning Markets. Today, we wanted to focus in on some of the economic data that came out of the US yesterday and how that impacted asset markets. I'm joined by Matt Henderson, one of the portfolio managers here at True Potential today, to discuss some of those factors. So firstly, I think probably focusing in on that story that Kevin was discussing yesterday, the look ahead to the inflation number. Certainly the US inflation number yesterday came out and did surprise for a number of reasons. Matt, do you want to maybe bring that to life for our viewers?
Yeah, thanks, and morning, Jeff. So yesterday, as you mentioned, US inflation report came out, so we had the headline CPI numbers out, and really the narrative that markets have been running with this past few months is that in the US we've actually reached that peak level of inflation, and what we should expect is from base effects and other factors that number to roll off and come down. And really what we saw yesterday was a challenge to that narrative. So if we put numbers actually around that, number came in at 8.3% headline inflation. That's slightly down from last month at 8.5%, but market had expected it to roll off a little bit further at 8.1%.
And it's worth also remembering where we got to just a couple of months ago, where we had 9.1%, I think, is the sort of the highest level that we got to in the US. Thinking about that maybe in a little bit more detail and having to sort of drill into it, as you said, we saw the headline number come down. A large part of that is because of what we've seen in the energy market and the changes there. But then the other aspect of yesterday that probably was a surprise to the market is what we saw at that core level, which is excluding food and energy from inflation, and maybe bring that to the discussion as to what we saw at core inflation in the US.
Yeah, so that's where the divergence has stuck out, as you've highlighted there, Jeff. So once we strip out those components, what we get is a basket of items that are stickier. So if you see price increases in those areas, it's generally harder for it to fall, or it's less volatile than the energy and food. And what we actually saw was core inflation pick up, so we're actually seeing more breadth and broadness within the inflation measures in the US.
And some of that as well is to do with the services industries really reopening, and some of that really starting to feed in, as well as service inflation was much higher than maybe would have been expected as well.
Yeah, and there was also quite a big driver from shelter, so housing and things like that in that.
And in the US, that's really a function of large rises in house prices that we've seen over the past 2 years, and that feeds in with the lag to owner's equivalent rent as it is in the US.
Yes, and then the other thing that we saw out of yesterday in the US was just how markets reacted off the back of that because of the challenge in the narrative. So we saw broad weakness across most asset classes yesterday.
And certainly when we look at the equity market, we saw the S&P down over 4% in the day. But maybe bring that into context. I've seen a lot of headlines this morning around a plunge in the markets, and certainly it is a very significant drawdown. But where does it take us back to?
Well, we've had strength in the equity markets, Jeff, for the past week or so. So when we've looked at prices, it only really takes us back to last Thursday. So we're not reaching new bottoms in what we're seeing in US stock prices.
And I think the other area of where we have looked at the volatility over recent months and has certainly been in the bond market, and that very evident yesterday, particularly at the very short dated 2 year end of the US market.
Yeah, so looking at the shape of the curve, we actually saw the short end push up. So short end more linked to economic data and US central bank interest rate hikes rather than the longer end. So we actually saw the short end push out 20 basis points, and really what that's coming down to is how market expectation of end interest rates is looking. So market added yesterday an extra 25 basis points into what it thinks the peak of US interest rates
just
would
for
be.
Context, that the 2 years probably pushing closer to 4%. Market expectations as at the close last night were around a rate of 4.25%.
Yeah, correct.
Okay, and then if we maybe bring that back just to one other area of strength yesterday in markets was certainly the dollar, and ongoing support for the dollar given some of those things that we've discussed.
Yeah, so given what you've just mentioned there of the increase in interest rates or increase in expectations for interest rates, markets have then favoured the dollar, just given the interest rate differential between US dollar and other currencies.
And then sticking on that topic of inflation, bringing it back to the UK, certainly today we've had just this morning UK data on inflation. What were the trends that we were taking from that?
Very much similar to what we saw within the US yesterday, Jeff. So headline inflation stepped down by about 0.2% from last month, slightly lower than expectations as well. As you said, like the US, mainly driven by what we've seen in energy prices, mainly gasoline or fuel over here. So similar themes to what we've seen in the US, but also once again very much similar that what we're seeing in the core measures is that exactly bang on in line with the US, both 6.3. So we're seeing headline inflation step down as a function of fuel prices coming down, but we're seeing core inflation remaining stickier than what had been anticipated.
So still a number of challenges really for central banks to navigate, as we hear from the Federal Reserve and the MPC next week as well.
Yes, absolutely.
Thanks, Matt, and thanks for bringing some of those comments to our clients. Thanks for joining us on Morning Markets. Please do look out for us again tomorrow. Many thanks. If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.